Eurozone productivity remains weak in the third quarter of 2024. Canada records a larger than expected trade deficit of 924 million Canadian dollar in October. And the United States economy adds 227,000 jobs in November. Welcome to the Economic Bulletin, where we present comprehensive coverage and expert insights on the latest economic trends and developments. Welcome back. We start off with the global economy as the Food and Agriculture Organization announced that its food price index increased by 0.5% in November, reaching its highest level since April the 2023rd. The rise was largely driven by surging international vegetable oil prices. The index averaged 127.5 points in November, marking a 5.7% increase from the same time last year, but still 20.4% below its peak in March 2022. According to the latest global trade update by the United Nations Conference on Trade and Development, global trade is set to reach a record of $33 trillion in 2024, marking a $1 trillion increase and reflecting a 3.3% annual growth. This growth is largely driven by a 7% rise in services trade, which accounted for half of the expansion. Meanwhile, goods trade grew by 2%, though it remains below its 2022 peak. While developing economies face challenges, including a 1% contraction in imports and a decline in South-South trade, developed economies led the growth in the third quarter. Imports rose by 3%, and exports grew by 2%, driven by stable demand. The World Bank announced raising $23.7 billion for its concessional lending arm, the International Development Association, aiming to generate a record of $100 billion in total spending power. This marks a slight increase from the $23.5 billion pledged 3 years ago. The funds will support 78 of the world's poorest nations, helping to invest in health, education, infrastructure, climate resilience, and job creation. World Bank President hailed the funding as a significant vote of confidence. Moving to Europe, Eurostat reported that Eurozone productivity remained weak in the third quarter of 2024, continuing a long-standing trend. Per capita productivity was flat compared to the same period last year, while productivity based on hours worked rose by just 0.5%, half the rate of overall economic growth. The economy grew by 0.4% and employment rose by 0.2%, but challenges remain. Industry is in recession, exports are weak, and households continue saving instead of spending. The Confederation of British Industry, CBI, has downgraded its 2025 growth forecast for the United Kingdom to 1.6% from the 1.9% projected in June. The 2023 growth estimate was also reduced slightly to 0.9% from 1.0%. Chief economist Louise Hallam attributed the revisions to higher businesses costs stemming from the government's recent budget measures. These include increased employers' social security contributions and a near 7% rise in the minimum wage from April. Hallam warned these changes could force businesses to raise prices and scale back hiring or investment plans, further straining profit margins already under pressure. German industrial production fell again in October as the sector continued to struggle with swathes of layoffs and potential trade tariffs threatening to compound the problem. The D Status reported that Germany industrial production fell by 1.0% rather to October, continuing its decline amid struggles in the energy and auto sectors. Energy production dropped 8.9%, while auto output fell 1.9%, adding to pressure from announced layoffs of Volkswagen, Ford, Bosch and others. Economists highlight the risk of a winter recession as Germany's industrial sector remains below pre-pandemic levels. Joining us from London is economic expert Dr. Mohammed Al-Atif to discuss the latest developments in Germany and France and its impact on the EU economic situation. A very warm welcome, sir, and on Qnews Economic Bulletin. Sir, how do the political crisis in France and Germany affect the overall stability of the European Union, given their roles as key economic and political players?
الفراغ السياسي دائما يخلق حالة من عدم
The political vacuum creates a kind of the political vacuum is creating something problem.
فأولا
Actually, the demolition of the interest of the investors about the stability of the country and the fluctuation of the financial markets and the low value of the market. All of these elements would be natural because of the political vacuum and the political instability. Also, not having a stable government is leading to delaying the decisive decisions regarding the economic issues. This would also affect the long-term investment. There is also, in addition to all of this, the political vacuum is weakening the European position regarding global challenges like inflation and the global economic crises. In addition to all of this, there could be some kind of unrest among the public, which would be also affecting the situation and leading to some turmoils that would be negatively affecting the economic situation. France, if you notice recently, has had a lot of demonstrations and upset, which was also reflecting the public unrest against the political leadership and against the economic situation.
Sir, to what extent could these political challenges worsen the European Union's economic stagnation?
إلى أي حد هذا يؤثر على
أولا لو نظرنا ألمانيا وفرنسا لديها تحديات مشتركة. أزمة الطاقة التي بدأت منذ
energy crisis that started since the Ukraine-Russian war is one of the problems that affect till now the economies of Germany and France. There are also demographic pressures, including, for instance, the old age of the population in Germany and the low rate of newborns. So this affects the economics of Germany and the long-term economic growth. In France also, if you look into the situation, there is a high level of government debts, and this is limiting the ability of the government for public spending. In Germany, there is also a deterioration of demand on the German products, and this would give some opportunity for this is for the other competitors to be competing with the German products, especially for the products of China.
Okay, sir, how could Germany's economic contraction and slow projected growth for 2025 influence the recovery of the European economy?
The German economy, it is the real engine, it is the real driver of all the European economy. So any stumbling or any problems for the economics in Germany affects all of the continent. And the problems of the German economy reflect on the whole. So now we believe that on the long term, especially if the economic problem is resolved, if there is more political stability, things will be better and there will be no more impact on the European economy and in general.
How does rising defense spending, driven by the Russian-Ukrainian conflict, add to the economic challenges faced by the European Union, sir?
A situation like with China, Europe is now dependent on the midway products for its own industry. So any kind of restrictions will increase the cost of production.
Sir, situation in
Europe.
China in which context, sir? Go ahead, sir, go ahead.
بالنسبة لروسيا تعتمد أوروبا على
Russia is dependent on Russian energy supply, especially gas. And after the war between Ukraine and Russia, there is some limitation on the Russian supply of gas. So still, Russia is supplying some supply of gas, but stopping all of the Russian supply of gas will be affecting Europe. There is also a decline in investment and trade between Russia and even China with the European Union companies. This would all lead to aggravation of the economic problem which the Europe is trying to recover from.
Okay, sir, how might the political turmoil in France and Germany hinder the EU's ability to negotiate and respond effectively to global economic pressures?
At this stage, they would need to find some solution. They should find a way so there would be no problem with the US. People are still waiting how the Trump era will be like and how the Trump administration would be like. Some people believe that the Trump administration will impose high customs in order to serve the American products. This will make the production more problematic in Europe. One of the key problems now is how to deal politically with the new findings that will be coming with President Trump.
Thank you very much, Dr. Mohammed Atifi, for your insights and informative knowledge. And now we move on to Asia, where the government data showed that Japan's base salary grew at its fastest pace in 32 years, rising to 2.7% in October compared to last year. This surge follows major companies implementing an average 5.1% wage increase during spring negotiations. Overtime pay, a key business activity indicator, rebounded to 1.4% growth, contributing to a 2.6% rise in nominal wages, now averaging to 293,401 yen, or $1,955, with inflation slowing to 2.6%, its lowest in 9 months. Real wages adjusted for inflation remaining steady in October after 2 months of declines. The Reserve Bank of India eased monetary policy by cutting the cash reserve ratio to inject liquidity into the economy while keeping the key interest rate unchanged. This decision comes as India's economic growth slows and inflation increases. The bank aims to balance these conflicting pressures by providing liquidity and attracting foreign currency deposits while maintaining a cautious stance on interest rates due to persistent price pressures. Moving to North America, Statistics Canada reported that the country's unemployment rate rose to 6.8% in November, its highest level in nearly 8 years, despite adding 50,500 jobs. This increase in unemployment has raised expectations for a larger interest rate cut by the Bank of Canada next week. The rise in unemployment is linked to more people seeking work. Wage growth for permanent employees also slowed to 3.9%, the weakest since June of the year 2023. Analysts had expected 25,000 jobs to be added, with the unemployment rate at 6.6%. Canada recorded a larger than expected trade deficit of 924 million Canadian dollars in October as exports failed to outpace imports despite a rise in exports for the first time since June. This marks the 8th consecutive month of trade shortfalls. The country's surplus with the United States, its largest trading partner, dropped to its lowest level this year. President-elect Donald Trump has previously expressed concerns about the United States trade deficit with Canada and recently warned tariffs on Canadian exports. In the United States, the Bureau of Labor Statistics reported the job growth surged in November, marking an expected rebound after hurricanes and striking workers distorted October's data. It added that the United States economy added 227,000 jobs last month as employees who had been on strike or impacted by weather conditions returned to work, bolstering a steady stream of employment gains. October's job gains, initially reported as 12,000, were revised higher to 36,000. The unemployment rate rose slightly to 4.2%, up from 4.1%. Still with the United States, trade deficit decreased sharply in October as imports declined by the most since late 2022. According to the Commerce Department's Bureau of Economic Analysis, the trade gap narrowed 11.9% to $73.8 billion from a revised $83.8 billion in September. Imports fell by 4%, marking the largest decrease since November 2022, dropping to $339.6 billion. Good imports declined by 5.5%, reaching $269.3 billion. Concerns among businesses about President-elect Donald Trump's threats to increase tariffs on foreign goods may lead them to front-load their imports. Bank of America said that investors poured $136.4 billion into cash in the week ending Wednesday, marking the largest weekly inflow since March of the year 2023. During the same period, investors also purchased $8.2 billion of stocks and $4.9 billion in bonds, but reduced their gold holdings by $0.4 billion. The Cypriot currencies saw a $3 billion influx, contributing to a record-breaking $11 billion in 4 weeks inflows. United States equities remain a favorite, with inflows continuing for the 9th consecutive week, especially in small caps, which reached a record high. According to the Commerce Department, new orders for United States manufactured goods edged up 0.2% in October, following a 0.2% decline in September. Orders for non-defense defense capital goods, excluding aircraft, a key indicator of business investment in equipment, fell 0.2%. However, shipments of core capital goods rose 0.3%, slightly above earlier estimates. Non-defense capital goods orders increased 1.5%, while shipments dropped 1.8%, signaling weaker business investment in equipment in the fourth quarter after strong growth in the previous 2 quarters. On another roll, Japanese Foreign Minister announced Tokyo's intention to resume trade talks with U.S. President-elect Donald Trump, emphasizing that the elimination of tariffs on cars and auto parts will be a priority. Speaking in Parliament on Friday, he cited an understanding reached during Trump's first term as the basis for the negotiations. 2019 Japan-US trade agreement allowed US farmers greater access to Japanese markets while shielding Japanese auto exports from additional tariffs.
And now it's going to reach a new level of importance because we're going to...
Oil prices dipped with weak demand and focus after OPEC extended deeply supply cuts to the end of 2026. Brent crude futures fell 0.3% to $71.88 per barrel. U.S. West Texas Intermediate crude futures lost 0.2% to $68.15 per barrel. Moving to gold prices, which slightly edged up as investors await U.S. jobs data for insights into the Federal Reserve's interest rate path. Spot gold was up 0.3% to $2,639.82 per ounce, while U.S. gold futures added 0.5% to $2,661.80 a dollar. Global shares has a mixed performance as markets await key U.S. jobs later in the day. In the United States, early trading, the futures for the S&P 500 and the Dow Jones Industrial Average were virtually unchanged. In Europe, France's CAC 40 added 0.4%, Germany's DAX was little change, and Britain's FTSE 100 edged down 0.1%. In Asia, Japan's benchmark Nikkei 225 slipped 0.8%. The Hang Seng in Hong Kong added 1.6%. The Shanghai Composite Index surged 1%, and South Korea's Kospi dropped 0.6%. That's all for now. Here's a roundup for today's key headlines. Eurozone productivity remains weak in the third quarter of 2024. Canada records a larger than expected trade deficit of 204 million Canadian dollars in October. And the United States economy adds 227,000 jobs in November. That's all for today's Economic Bulletin on Qnews. Stay connected for more news and updates.